Hello everyone, welcome back to the channel. In today's gold market update, we are going to break down the current 4-hour price structure, where gold is consolidating near highs after a strong expansion, and the market is now preparing for its next directional move. I'll walk you through the critical support and resistance zones, where continuation becomes valid, where downside risk opens up, and how to approach this market professionally without chasing price. Let's start with the chart. On the 4-hour time frame, gold remains in a strong bullish structure. Price has maintained higher highs and higher lows, respected a clearly defined ascending trend line, shown strong impulsive legs followed by controlled pullbacks. This tells us the trend is still intact, but price is currently in a digestion phase, not an aggressive expansion phase. That distinction is important. Current price action, consolidation at premium. Right now, gold is trading just below the upper resistance band, where we can see compression of candles, reduced momentum, short-term indecision. This behavior usually appears before a retracement or continuation, depending on how key levels are respected. At this stage, the market is not offering high-probability chase entries. Retracement expectation. Value zone revisit. Based on structure and Fibonacci alignment, the market is likely to retrace toward the 50% level, which also overlaps with the rising trend line, previous demand imbalance. This zone represents discount pricing within an uptrend, and historically, price has responded aggressively from this area. This is where smart money looks for continuation, where retail chases breakouts. Primary buy condition. 46.55 hold. If price pulls back into value, holds above trendline support, and sustains above 46.55, then bullish continuation becomes valid. Above that level, upside targets open toward 4700, 4750, but only after confirmation, not assumption. Bearish risk scenario, structure break. Now let's clearly define downside risk. If price breaks and closes below 45.71, then selling pressure can accelerate quickly. Below this level, downside targets open toward 4,500 and potentially 4,400 if momentum expands. This would represent a deeper corrective move, not a trend reversal, but it would invalidate aggressive long positioning. This is where short side opportunities become higher probability. Why patience matters here. This is not a market to overtrade. We are currently between premium resistance above, high-quality demand below. The best trades come from reaction zones, not from emotional entries in the middle of the range. Professionals wait for price to come to them. Fundamental context. Gold remains supported. From a broader perspective, gold remains fundamentally strong. Safe haven demand continues to support price due to global uncertainty, macro instability, and risk-off flows. This reinforces the idea that pullbacks are opportunities, provided structure remains intact. Execution plan, clear and disciplined. Here's how to approach this market. Avoid chasing price near highs. Wait for retracement toward 50% plus trendline. Buy only if 46.55 holds with confirmation. Target 4,700 to 4,750 on continuation. If 45.71 breaks, expect downside toward 4,400 to 4,500. Trade levels, not emotions. Risk management comes before profit. Let's summarize clearly. Gold trend remains bullish on 4H. The market is currently consolidating near resistance. Retracement toward value is likely. 46.55 is the bullish continuation line. Below 45.71, downside pressure increases. Fundamentals continue to favor gold. This is a wait for price to come to you market. If you want to learn how to trade structure, trend lines, and institutional levels with confidence, you can message me directly on Twitter for one-to-one technical and fundamental mentorship. If this update added value, Don't forget to like, subscribe, and share your bias in the comments. Are you waiting for the pullback or expecting continuation first? Trade safe, stay disciplined, and I'll see you in the next update.